Welcome back, investors. Today I'm bringing you a Chinese company that is listed on the New York Stock Exchange. These guys are getting a lot of attention right now, and this is due in part to the fact that they are up about 100% year to date, but are currently about 40% down on their February high. What's interesting about this company is that they are profitable, they have a strong balance sheet, and their current price is only a fraction of their IPO price from 4 years ago. The company that we're going to look at today is Qudian, NYSE ticker QD. In this video we will be looking at who the company are and what they do. We will look at their ventures into other markets. We will look at their management team. We will take a look at some analyst price targets and technical charts and see how they have some major institutional shareholders. Finally, we will assess their financial statements. Before we get into the video, if you like the content, smash that like button. We're aiming for 50 likes in this video, let's make it happen. It takes a lot of time to research these companies and make these videos. Hitting that like button would help it be seen by more people. Subscribe to the channel if you're new and hit that bell notification so you never miss one of my videos that could potentially make you money. I want to point out that I am not a financial advisor and this is not financial advice. All the information in this video is freely available and I encourage everyone to do their own research if thinking about investing in this company. Make sure you watch the entire video and don't enter into any stock blindly without viewing all the information on offer. At the time of this recording, I do not hold a position in this company, but that might change. Qudian is a Chinese company involved in the operation of an online customer credit technology platform. Through its technology platform, the company operates two segments. A credit services segment, which offers a traditional online installment credit business, including cash credit services and merchandise credit service, and a transaction service segment that offers loan recommendation and referral services to third-party financial service providers and assumes no credit risk. The company uses big data-enabled technology such as AI to service young mobile active consumers. The company operates online with nearly all the transactions facilitated through mobile devices. Borrowers can apply for credit on their mobile phones and receive approval within a few seconds. Approved borrowers are then able to draw down their cash credit using cash dispersed immediately into their Alipay accounts in digital form. Borrowers also repay credit drawdowns through their Alipay accounts. The company conducts its business in China with the mission to use technology to make credit accessible to hundreds of millions of young, mobile active consumers in China who need access to small credit for their discretionary spending. They use their advanced data technology capabilities to understand prospective borrowers from different behavioral and transaction perspectives, assess their credit profiles with regard to both their willingness and ability to repay, and offer them credit, usually at very high rates. Qudian is classed as a microlender, very similar to payday lenders that operate in the UK and some US states. CEO Min Lo and former CFO Carl Jung stated years ago on Qudian's IPO that his intention was to acquire multiple businesses and build a war chest of companies. They have had varying levels of success in this regard, and I think this might be one of the reasons why their share price remains so low. They have explored opportunities to push into the booming Chinese luxury e-commerce market. In March 2020, Qudian set up a luxury e-commerce platform called Wanlimu. In June 2020, they bought 30% of Nasdaq-listed Chinese online luxury retailer Seeco for $100 million, becoming the company's biggest shareholder with a 30% stake. Recently, they've indicated that they're always making efforts to explore new business ventures and investment opportunities, including but not limited to early childhood education. However, not all of their ventures have proved successful. In 2018, Qudian set up Dabai Auto, an automotive retailer. It did not go well and was closed shortly after. Min Lo is the founder, chairman and chief executive of Qudian. Prior to founding the company, Mr. Lo served as vice president of marketing of OKBuy.com, an online marketplace for shoe products from 2010 to 2013. Mr. Lo was founder and CEO of Jiyiri.com, an online birthday-related service provider, and co-founded Dabai.com, an online social platform for college students. Mr. Lo received a bachelor's degree in telecommunication engineering from Jiangxi Normal University in 2004. In 2017, Min Lo was ranked 255th on a Forbes China Rich list following Qudian's successful IPO on the NYSE. Mr. Long Zhu has served as director since November 19, having joined Qudian in 2016 as a senior vice president. Before joining Qudian, Mr. Zhu co-founded Qudian.com. He was also a co-founder with Mr. Lo of Yajiri.com. Mr. Zhu founded and served as CEO of Beijing Time Film Technology Company. He received his bachelor's degree in resource, environment and urban rural planning from Peking University in 2005. Mr. Liv, head of user experience department. Prior to joining Qudian in 2014, Mr. Liv has been working with Mr. Lau and Mr. Zhu for many years at both OKBuy.com and Jijiri.com. Prior to this, he worked as a supervisor for the mobile department of 95 Online Information Technology. He graduated Kangzhou Technical College with a major in computer applications in 2005. In conclusion, it's good to see a stable management team that have worked together for many years. The board comprises of Mr. Low, Mr. Zhu, and 3 highly experienced independent directors. This can be seen on their website. As we can see here, Qudian has dropped massively since its IPO in 2017. In fact, it would need to gain over 2,000% to go back to that valuation. As we see here, Qudian has been in an upward movement since December, reaching heights of about $4 back in February, before dropping like the rest of the market. Over the past month, they have found a level of support at about $2 mark, and have been rising again over the past few days. This may be due in part to the earnings report being due this coming week. I was unable to find any relevant recent analyst ratings. The most recent ratings I could find are from nearly 12 months ago. In my opinion, they are not very relevant, but I'm showing them here so I don't appear biased, as I always show analyst ratings for all the companies I look at. According to Simply Wall Street, Qudian has a fair value of nearly $18 and is currently over 85% undervalued. As you can see here, the financial health of the company is excellent in both the short and long term, and the balance sheet also looks fantastic. But we will look more at this in the financial statements in a moment. We can see here that institutions and insiders own over 50% of the company, with the general public accounting for less than 49%. CEO Min Lo owns 25%, and a number of other reputable institutions have large holdings such as Goldman Sachs and the Vanguard Group. So first we are going to look at the most recent balance sheet. This is as at September 30th, 2020. The first thing we will notice is that we have current assets of over 1.7 billion and non-current assets of over 200 million, giving total assets of nearly $2 billion US. Total current liabilities amounts to only 145 million and liabilities overall under 300 million, with a huge 1.1 billion in retained earnings. From my perspective, this is an incredible balance sheet when you consider the current market capitalization of this company is only a few $100 million. It needs to be kept in mind, however, that these are unaudited financial statements of a Chinese company. So when we look at the income statement for the 3 months ended September 30th, total revenues of 125 million, leaving net profit of 85 million. After costs, expenses and taxes, which is a great 3-month result because it's profitable. For the 3 months ending June 30th, revenues were 165 million, leaving net income of 25 million. Again profitable, but with a lower net income due to a very high provision for receivables, which shows prudent financial management in my opinion, as they have provided a provision when they are doubtful of receiving the debt. For the 3 months ended March 31st, total revenue was 135 million. And again there was a very high provision for bad debt, which in the end they had recorded a net loss of 69 million. It will be very interesting to see their audited year-end results, which will be due in the next few days, because as 2020 went on, the provision for bad debt in each quarter results appears to be lower and lower. So the figure that we currently have after 3 quarters is showing a profit of $40 million for year to date. If they have overestimated the provision, then their overall profit figure may far exceed $40 million. When we look at the third quarter operational highlights, we see this. Weighted average loan tenure for transactions serviced on open platform was 6.8 months for this quarter, compared with 10.6 months for the second quarter. This may have something to do with provision for bad debts. And again in the notes we see, provision for receivables and other assets decreased by 87% for the third quarter of 2019. This decrease was primarily due to a decrease in the past due on balance sheet outstanding principal receivables compared to the third quarter of 19. So in conclusion, I hope you enjoyed the video. If you liked it, smash that like button, and if you're new to the channel, hit the subscribe button and bell notification. I think there is huge potential in this company to go up multiple times in value. They have been posting large profits regularly and have a strong balance sheet. One of the strongest balance sheets I've seen recently. But keep in mind, this is unaudited and they are a Chinese company. They seem to be getting more efficient, however the share price has dropped worryingly from heights in the 30s down to as low as $1. This is due in part to some of their crazy acquisitions, also challenges that the pandemic brought and regulatory tightening. However, they seem to have dealt with this very well. I consider the current entry price of $2.60 to be an attractive entry point. As always guys, this is just my opinion, and if anyone is thinking about buying into this company, I encourage you to do your own research. As I said before, I am not a financial advisor and this is not financial advice. Investment in foreign countries that have different regulatory environments, such as China, always tend to be pretty risky, especially in China where companies could be subject to radical regulatory change at any time. This is a high risk, high reward play. There is the potential for massive rewards from companies like these. However, there is also the risk that stocks go down massively. Like in this case, Qudian IPO'd in the 30s and has dropped as low as $1. So please guys, only invest money that you can afford to lose. Thanks for watching the video, I hope you enjoyed it. What are your thoughts on the future of Qudian? What are your thoughts on investing in Chinese companies or investing in this type of money lending companies in general? Leave a comment down below, I'm interested to hear what you think. See you in the next one.